So, ladies and gentlemen, welcome to our CEO update call and thanks for joining us today. My name is Anke Linnartz, I'm head of IR, and with me today is Dr. Sebastian Hirsch, our CEO. We will start with a presentation and we'll have time for Q&A right afterwards. So let's get started. Dr. Hirsch, the floor is yours.
Thank you. Hello, everybody, and a warm welcome to everyone. Thank you very much for taking the time to joining me today. As many of you may know, I've been part of GRENKE for almost 2 decades and held various leading positions. While I hold fond memories of every single year, the past 12 months have been exceptionally noteworthy for me. It was in November of last year, to the exact day today, that I assumed the role of interim CEO. Only a few months later, as of February 2023, I had the immense privilege being appointed CEO of GRENKE. To this day, I remain humbled by the trust that the supervisory board has placed in me. And now, together with my board colleagues Isabel Rösler and Gilles Christ, as well as our general agent Dr. Martin Pahl, we as a team are more than ready to run GRENKE. Today, I want to share my CEO perspective on GRENKE. I've been reflecting on what our team has achieved, where we stand today, and what we will focus on going forward. So let me allow to share that I am an enthusiastic cyclist. For me personally, cycling is about dedication, endurance, and elevating your strength to reach a goal, like, for example, finishing a mountain stage. And once you have reached one mountain top, the summit, you set your goals to higher mountains, always challenging yourself, always going the extra mile. And it is not about being the fastest on the first kilometer. It is endurance, resilience, and continuous dedication throughout the entire journey what makes you a successful cyclist. Cycling alone is not as enjoyable as being accompanied by a great team. A team that works together to reach the summit and support each other, especially when conditions are harsh. There are a lot of parallels between cycling, sports, and steering a company, as well as running our business. We put crucial measures in place with our digitalization program, our focus on profitability, and our solid financing. All of them were led by the same values: endurance, resilience, dedication, and teamwork. So, some of you might spot that the background of the slide features are a section of the Col du Galibier, one of the most famous climbs of the Tour de France. A challenging climb with a steep gradient that requires true persistence. One of my personal goals this summer was to conquer this climb. And I did. And symbolically, we at GRENKE also found ourselves on a similarly challenging stage. As you all know, 2022 and 2023 were marked by many external events. While some of the geopolitical developments, such as Russia's war against Ukraine or the horrible crisis in the Middle East, fortunately did not affect us directly, we nevertheless faced some macroeconomic turbulences, included supply chain bottlenecks, sharply rising inflation, and first signs of economic slowdown in many parts of the world, and a substantial shift in monetary policy, including rising interest rates at record speed. As a financing partner for small medium enterprises around the globe, these developments had implications for our customers and our business, at least to some extent. But despite all adversity, and Thanks to the commitment of our over 2,000 colleagues around the world, I'm extremely proud of what we achieved. We are not only back, not only here to stay, we will step up gear. So, looking back, we were able to continue our long-term average double-digit growth with a plus of 12% in leasing new business volume in the first 9 months this year. It demonstrates that our well-diversified object portfolio pays off as we consistently address the demand of our customers. Especially our green economy object show strong demand. E-bikes, for instance, one of the most dynamic object category. And that accounted for roughly 20%, means for every fifth of our newly settled leasing contract in the third quarter. And with that, we cycle along the road towards achieving a leasing new business volume of at least 3 billion euro next year. This will mark an important strategic milestone in GRENKE's history. But also our profitability developed positively throughout the year. I'm very proud that we were able to counter the rise in interest rates and pass on higher refinancing costs throughout 2023. We have been able to keep the margin stable for 3 quarters now. I've always said, and I will never get tired of repeating, a stable TCM2 margin clear above 16%, that's the basis for our earnings of tomorrow. Our margin also more than offsets slightly lower than initially expected leasing volumes in 2023. While we've built a strong foundation for further profitable growth, let me be crystal clear. We won't rest on our laurels. We have more work to do. Our focus is clearly on maintaining this level of profitability while we embark on the next stage of our growth journey. And when I look at the next stage of our race, I do so with confidence. Yes, our target for 24 are ambitious, and there will be some climbs and sprints. But I strongly believe we can do it. Throughout the years, GRENKE has always pursued a well-balanced and diversified financing strategy. And this is what we continue to do. Besides the Col du Galibier, there was another goal that I had set for myself for summer 2023. A goal that was even more challenging, issuing the first green bond at GRENKE. And that's what we've successfully delivered in September. We'll use the proceeds to fund our portfolio expansion into green economy products. And issuing the bond at benchmark volume of 500 million euros, that was a cherry on top. Although the interest rate is higher, our solid access to the capital market enable us to use the established funding structure as required and in a self-determined manner. Also very important for us is our credit rating by major rating agencies, since it has a large impact on our refinancing costs. We were very pleased that Fitch Ratings has recognized the strength of our business model. Fitch rated the group in October 2022 for the first time with a BBB and a stable outlook. And the new S&P BBB rating from March this year is equivalent to the initial Fitch rating. However, our outlook was upgraded to stable and now reflects the expectation that we will continue to deliver solid and risk-optimized profitability, as well as adequate asset quality and healthy capital buffers. S&P also confirmed our A2 short-term rating. In sum, we are more than well equipped to finance our further growth. So we strengthen our position as a global financing partner for small ticket leasing. We also made good progress with our franchise integration. You know, from 2003 to 2019, we were very successful in our expansion with franchise companies. Today you could say GRENKE startups. We want to continue our success, but without relying on external financial investors. And that's why we decided to acquire the shares of all 16 franchise companies. Especially markets like Australia, the US and Canada represent huge growth potential, so that we consider them among our future core markets. By now, we completed the full integration of 11 franchise companies. However, we did not pass the finishing line yet. And let me say this, I'm not happy about that. Not at all. Also, we didn't achieve the level of progress I had initially envisioned. We gave it our all. As so often, unforeseen challenges came up. The complex technical formalities in various countries where the franchisees are located proved to be more difficult than anticipated. And this is despite our previous experience in consolidating them. By the end of October, there were still 5 pending integrations processes for companies in Canada, Chile, and Latvia. One of the main challenges we face there is agreeing on a fair purchase price, target by target. As I said before, you can compare this to climbing mountains while road cycling. It's not about speed. It's about endurance, resilience, and dedication. We have done and will do everything to come up with a solution that is in the best interest of GRENKE AG and all our shareholders. Ladies and gentlemen, there is no sustainable growth without necessary and permanent investments. As an athlete, you are always in training. It is part of the dedication you need to be successful at the top in the long term. Teamwork, continuous training, and permanent technical renewal are essential to achieve long-term success in sports and in business. Just as digitalization is a crucial factor for our future growth and competitive edge. So it's our responsibility to invest in the right digital tools and execute them effectively to achieve our goals. I envision leasing as a catalyst for transforming small investments into a digital customer experience. This isn't just for the sake of the experience, but because I firmly believe that this is the only way to encourage important and much needed investments. Through leasing, we enable investments and accelerate their implementation, thus creating customer-centric and resource-efficient value. And all digitalization makes our process more efficient, improves our operational excellence, and adds to a better customer experience. And therefore, we have stepped up our digitalization efforts at the beginning of the year. We initiated a new digitalization program, Digital Excellence. As already announced, we will invest roughly 50 million euros over 3 years, globally and along the entire value chain. This will further optimize our digital infrastructure and strengthen our process efficiency. This will evidently lead to falling costs per process and per contract. So let me highlight 3 of our current key priorities. Firstly, we intend to move and transform our business to the cloud. It's not only key for using the best technology and software. Above all, this is a decisive basis for modularity. Modularity will give us a high level of flexibility and confidence in process automation and process governance, also enabling real-time processes and a 24/7 seamless availability of all our digital tools worldwide. Secondly, we are currently making a quantum leap towards our ideal of plug and lease. Leasing should be as easy as online shopping, no matter the object or investment. At the end, I would like to create a GRENKE ecosystem with a smooth digital way to join the GRENKE world for customers as well as resellers. And lastly, we will further improve our process automation for all core processes. In leasing, to make things even more efficient. Please remember that we are a highly regulated company which emphasizes our need for standardized and compliant processes. And this includes all our information and data that we handle daily. Data that we collect or generate is more than just an information wait to be read. It is supposed to drive our processes forward, and at the same time, it trains our automated decisions. So in the future, our service standard should be focused on speed and real-time core processes. That's the way we move. Taken together, we have already made substantial progress with our digitalization efforts and just entered a new stage to accelerate operational efficiency and excellent digital user experience. In the long run, we aspire leasing being as simple as online shopping. Sometime you must drop down gear in order to accelerate. Digitalization is only one part of our efficiency measures. In addition, we have clearly defined key areas that we will address going forward. Firstly, we focus on those regions which add value and will withdraw from markets where we don't see sufficient potential in the medium term. Our aim is to gain relevance in all markets where we operate by achieving a minimum market share of 10% in small ticket leasing. Secondly, digitalization is not only a question about technology. It's a shift. It's a shift for each organization, for processes, and for collaboration. To implement a culture of digital first is one of the most important things. For me, it's not a decision for or against. Instead, it is a decision about how quickly, and how seriously. And the skill and mindset of our team must continue to develop radically. I'm convinced that our employees will act as digitalization accelerators. That is our mission and my personal goal. This is a lever for real efficiency and scaling when people and digitalization work together. And lastly, we want to leverage our digital capabilities to realize our scaling potential. With a clear and unique offer to the market, a presence and relevance in the market. And with our digital infrastructure, leasing gets to be the easy and convenient choice for realizing small ticket investments. Easy and convenient for customers and partners, as well as for our employees. Let me emphasize this. It's a team sport, both cycling and in the business world. Digital and operational excellence won't be possible without our employees. Our GRENKE team is a foundation for continuing our growth journey. And therefore, we will continuously invest in our team. Firstly, we are a global player with values and roots in Baden. We want a GRENKE entrepreneurial, down-to-earth and competent mindset combined with our employees' expertise of the local markets. Not only our business model has proven to be resilient through the different crises, but also, and equally important, so has our team. We have around 250 colleagues that are with us for more than 15 years. This expertise is complemented by new specialists and builds that strong, solid, and reliable team for our business success. At the end, our business is a people business. Secondly, we use all tools of communication for active and conscious interaction with people of all stakeholder groups. I am sure that it is important to maintain a constant and active dialogue. Internally, we use town halls to keep everyone informed about strategical decisions. Furthermore, our strategy is not a one-way, top-down communication. We include our first line of management in our strategic decision process. Their knowledge of local markets and overall trends is what keeps this organization agile to react quickly to emerging opportunities. And lastly, our strengths provide us with the necessary self-confidence, which evidently should serve in combination with our brand as a door opener when facing customers and resellers. We want to be perceived as a source of knowledge in the financing industry, helping small medium enterprises worldwide to finance their investments. And at the end, ensure the path for investments into a more sustainable future. Ladies and gentlemen, we stand for sustainable and trust-based relationships with our customers and partners, as well as with our investors and employees, following the credo, once at GRENKE, always with GRENKE. To sum it up, GRENKE is on track. We clearly identified our key levers to accelerate our growth journey. We have successfully tackled macro headwinds and continuously grew our leasing new business. Our margins remain stable between 16% and 17%. We further diversified our solid funding structure and, for the first time ever, successfully issued a green bond with a benchmark volume, demonstrating our strong access to the capital markets. Plus, we've made good progress on our franchise integration and introduced a pioneering digitalization program. We are in a strong position to successfully continue on our profitable growth path. We are in the driver's seat. On this slide, ladies and gentlemen, it's not the profile of the Galibier. No, you can see our growth path of our leasing business since our IPO back in 2000, in both dimensions: new leasing business and volume of leased assets. And this perfectly shows the empirical evidence of growth, and that by the end of next year, we strive to leave the 2019's level behind us. What this graph actually shows is the resilience of our business during and after all the external shocks. The financial crisis in 2009, as well as the pandemic in 2020 and 2021. We have definitely left the Corona dip behind us. Ladies and gentlemen, 2024 shall mark a historic level: 3 billion new leasing business. That will be a new record. But at GRENKE, we are used to setting records. We have been setting record after record for 40 years. And we will continue this good tradition. So let's now take a look ahead. Our ambition is clear. We want to continue on our strategic roadmap with further growth. Therefore, we have set ambitious targets for 2024. Not only our new leasing business, but also our profitability, measured with our CM2 margin, remains a key component of our equity story. For next year, we continue to target a stable margin development and expect our CM2 margin to be at or around 17%. This means GRENKE's net profit is expected to increase to between 95 to 115 million euro. Within a higher efficiency, a better level of costs per contract, and increasing operating income, we will also toughen our cost-income ratio. I will now dive into a few key areas which we assign strategic priority to deliver on our plan. First, let's take a look at our markets and regions by strategic cluster. As you know, we drive a tailored market expansion approach and select our geographies based on growth potential. This enables us to execute on our differentiated country strategy most efficiently. So we categorize our key regions into established core markets, hidden stars, and future core markets. In our established core markets, we combine markets where we have a high market share, sustained market growth, and a strong network. Our footprint is particularly strong across continental Europe as well as the Nordics. And here we want to expand our leasing volumes through two tailored measures. On the one hand, we aim to increase market penetration and reach even more entrepreneurs with our leasing solution. And on the other hand, we expand our leasing portfolio and diversify even more into new product categories such as e-bikes or solar panels. In these markets, we address our customers either directly or through resellers. In our hidden stars, we include markets in which we have stable market shares, moderate market size, and an established network. So we aim to maintain a constant presence and focus on continuing our profitable growth path in this cluster. And lastly, our future core markets can be characterized by currently low market shares, but significantly expandable network today and higher growth potential in the long run. Accordingly, our focus going forward will be on expanding our dealer network and to further tap on market potential. That's a well-proven path since more than 25 years international expansion at GRENKE. Ladies and gentlemen, leasing is always an investment decision made by our customers. So that the origin of every leasing contract is an investment case. By keeping that in mind, having our customers at the very core of our business and making leasing as convenient as possible, we will make sure that we are the best choice for our customers. We will be there at the right time, at the right place, at the point of investment. As you might imagine, we currently see a strong leasing demand for products around the so-called green economy. It is our customers' demand and we are going to finance it. Sustainable small ticket mobility comprises e-bikes, e-scooters or charging points. Particularly, the leasing of e-bikes shows strong growth rates. But we also offer leasing solutions for a diverse range of objects related to resource and waste management. And investments in renewable energy mainly comprises PV systems, solar panels, battery storage solutions, and heat production. It becomes more and more important and more leasing relevant. We will continue to further expand our portfolio opportunistically beyond green economy products depending on market trends and customer needs. Two examples, despite the green economy, are medical equipment and robotics, from which we expect a lot going forward. The healthcare and medical environment trend means two things for us: a relevant object category as well as a relevant industry. Especially from robotics, I personally still expect a huge potential since the achievements of AI have only just begun to boost the automation of processes. I'm convinced that robots will change our working environment, for the entire economy and therefore also for small medium enterprises. They will enrich our everyday and working lives, and the leasing solution is the obvious choice. So, as we can see, we support innovation and enable the digital and green transformation of small medium enterprises worldwide. GRENKE wants to make leasing the choice for our customers to realize investments, no matter which object we are talking about. Therefore, our mission includes 3 components which we will pursue consistently. Firstly, we will reduce complexity of leasing. And as I mentioned before, leasing should be as easy as online shopping. By making leasing more digital, our customers should have the best possible leasing experience. Ultimately, leasing is not an end in itself and not a product designed for resellers, manufacturers, or financial institutions. Leasing is a solution for the needs of small-medium enterprises. Secondly, and closely interlinked with the first factor, we want to speed up leasing. Today, our own forced and algorithm-based scoring model is one of our unique selling points. With even more digital and automated processes, GRENKE can substantially increase the user-friendliness of leasing and establish it as a standardized, convenient financing choice. Our digitalization effort already started to pay off, and we will work hard to accelerate our leasing process throughout the whole value chain, from application to scoring, to signing and payment, up to a second life in a circular economy. And lastly, our mission is to unlock innovation among small-medium enterprises and contribute to their sustainable transformation into green and digital. We actively support our clients whenever they have investment needs, be it with regards to e-bikes, robots, or IT equipment. This is our contribution to financing the innovation agenda of small-medium enterprises, and it will finally help us to bring small-ticket leasing to the next level. Ladies and gentlemen, 1 year ago, the uncertainty surrounding of 2020 and 2021 was still evident. We were shaped by the pandemic and the consequences of the short attack and special audits. Of course, we learned a lot during these challenging times and did our homework. But above all, we shifted gears. We reset the chain back on, stepped on the pedals, and brought even more performance on the road. After 3 difficult years, this turnaround is not only a great achievement in light of continuing and new major macroeconomic challenges in the world. This turnaround is the most important precondition for us to pick up our 3 billion target next year. Our alignment in terms of drivers of value within the leasing portfolio, cost structure, digitalization, and refinancing was successful. We've laid a strong foundation for further profit growth. So let me briefly summarize today's key takeaway before we dive into the Q&A session. I can proudly say that we are fully on track to continue our profitable growth path. We are ready to climb the next mountains ahead and will do this together with our dedicated team to the ultimate benefit of our customers. We successfully grow across all relevant channels and in all major markets. Our momentum in new leasing volume is strong, and we are well positioned to continue this growth journey. We target to retain our profitability at a stable level which gives us enough financial headroom to execute on our strategic direction. We launched our digitalization program and invest into further automation and our digital infrastructure. And this will accelerate not only our sales processes and enable future growth, but will also benefit our operational efficiency and ultimately our cost structure, driving long-term value. Simply put, our equity story remains strong. And the management board and supervisory board underline this today with a resolution to buy back shares. We will obtain the necessary approval from BaFin. This program does not change our growth story in any way. On the contrary, we are creating options for action that will enable us to return the shares to the market at a later date, either directly or via a convertible bond, for example. But now we are waiting for the approval of the supervisory authority BaFin, and we will keep you informed. So let me close today's session with the final thought on GRENKE's long-term prospects. We are the global leasing partner for small-medium enterprises. And we are here to establish leasing as an undistributed choice for SMEs to realize investments. That's my vision. That's what drives me personally and us every day. That's how we as GRENKE support global innovation and the transformation towards the green economy. Ladies and gentlemen, with that, we will jump into the Q&A session. Again, thank you for joining us today, and I'm happy to take your questions now.
Thank you, Dr. Hirsch. If you wish to ask a question, you may press star followed by 1 to register. And the first question is from Johannes Thormann with HSBC. Please go ahead.
Good afternoon, everybody. Johannes Thormann, HSBC. 3 questions from my side, please. First of all, regarding your share buyback, did I miss it or didn't you tell about the volume? And probably you can also elaborate why you didn't choose to buy back 81, for example, to make use of the low market prices. Secondly, you talked about the 3 categories of your markets, core markets and so on. But are there any markets already decided on which you want to exit, or how did you do this? And last but not least, could you give us an update on the new business in the 4th quarter in October? You should have the monthly data already available. And normally I would say October needs to be at least 200 million to meet your full year guidance. How comfortable are you with that level?
Yeah, thank you, Mr. Thormann. First, to the share buyback, as announced today, we are going to get the approval from BaFin, and we are in line with our authority based on the annual meeting of 2020, if I'm right. And it's 5% share buyback, and that's also the level we would like to get approved by BaFin. We also checked several options. We will do the share buyback via the market, so it will be, let's say, a permanent process over a couple of months buying that back. And it's a bit different to take one buyback like it is maybe in the 81, but also the 81 is the thing we are thinking about when there is a core date. So that's absolutely right, but it's a different instrument, and the way to buy that back or to core that is a bit different. The second question, if I'm right, was about the.
Didn't say anything about the volume. So
it's a roughly, depends a bit on the share price at the end, of roughly 50 million. That's the volume.
Okay, thank you.
The second question was linked to our countries, our market sectors and clusters. We decided, as you know, that we will leave the Turkey market. We will also leave a very small market in Singapore. And for other regions, there's no decision done at the moment. We are analyzing that. And it's not only the way to leaving a market. There could also be some other synergies between smaller markets, and we are checking that. So there's no decision done. And in front of us, and that two markets we will leave because they are too small, and the potential of the market is too small for us, and there are no synergies to other markets. And last but not least, the business is running, let's say, as a normal Q4 in relation to the first 9 months of the year. So also October, it's closely in line with our expectation in terms of volume, but also in terms of the requests. That's much more important. And as you may know, the most important month of the fourth quarter is December. That was always the case in the past, and it's also that year.
Okay, so the next question is from the line of Mengshan San from Deutsche Bank. Please go ahead.
Thank you very much for taking my question. So two questions mostly. So the first one is, you're talking about expanding your product portfolio with a lot of new products like e-bikes, solar panels, robotics, as you said. Can you elaborate a little bit more on your sales approach? How do you get the chances to sell or leave these products? This is the first question. And the second question is on your funding for next year. So we probably next year we will see a large volume or a lower level of volume of old lease receivable retiring because you have low level of new business in 2019. And in case to achieve your 3 billion targets for next year, there will be a level of funding gaps in between. So what is the funding plan for next year? Thank you very much.
Yeah, thank you. First, there are several ways to getting access to new object categories. On the one hand, we have a huge network with resellers and dealers. We are in contact with more than 600,000 SMEs worldwide, and to being connected to them, you are aware of the, let's say, investment needs of small medium enterprises. And then maybe there are some new opportunities like robotics. It's quite new in some industries. Robotics are more familiar at the moment, like in the medical area, for example. In some countries, robotics in Asia, for example, it's more familiar. And we are trying to entering that markets, talking to manufacturers, talking to dealers, or talking to clients where the direct need for that. So that is very different, and it depends a bit. And so we implemented a robotic solution, for example. We implemented some years ago the e-bike solution, and that is an ongoing process since years and decades. We do so. On the other question, funding, you are right. When we go for a 3 billion new business next year, and it's making a quite simple calculation, it's roughly a third of our new business we can cover by our own cash flow we have within the portfolio. So there's a need of 2 billion funding at the end of the day because there's no maturity transformation in our portfolio. And the 2 billion, it's based on our funding structure and funding mix. The capital market access is quite important to issuing bonds, smaller one, maybe some bigger ones. The structured funding via ABCP, ABS programs is important. We did a new program in Finland, which will support us also. And of course, GRENKE Bank will be part of the funding. And the funding mix today could be nearly the funding mix of next year from my today's best knowledge. You will see a plus of 5% plus or minus in the shares. It depends a bit on the market and the capabilities of the market. Is that a good idea to go for a big bond or making smaller issues? It depends on, but it will be more or less stable from the funding mix, I guess.
Very clear. Thank you very much.
So we move on, and the next question is from the line of Tobias Lukesch from Kepler Cheuvreux.
Yes, good afternoon. Also, 3 questions from my side, please. Firstly, on the buyback, regarding the timing, can you give us any indication, when you plan to start the buyback and for how long you think that's gonna last? Secondly, capital management. Now the question is, will we see further buybacks in the future? And also around capital planning and potential new leasing business growth. Do you still expect to potentially do capital increases to further foster new business growth, or are we rather in a capital return mode now? And lastly, on the new products, the e-bikes and the solar panels you mentioned, I was wondering if that brings a larger shift or change to the residual value at risk. Has not changed materially 21, 22. Might that come with a new product focus? Thank you.
Yeah, thank you very much. First, timing, buyback was important to take the opportunity to make a decision on the board level. Now we are waiting for the approval. So at the end, we don't know what the time is. But I think it will be a couple of weeks in minimum. But we don't know that at the moment. BaFin is aware of that. We are in dialogue with them. And so we have to wait. After that, we will go forward with that. I think if we can start the program, it will be roughly 18 months to taking the full volume in the buyback, because it depends on the volume in the shares on the daily base. So I think roughly 18 months we have to expect to get the full volume in the share buyback. From the future perspective, it depends a bit on what the term of the future. From a short-term perspective, we are willing to take the buyback because for the next 2 years we see the excess capital because of the strong profit over the last couple of years. Volume came a bit down. The capital requirements compared to 2019 and 18 with a goodwill, for example, not that high as it was in the past. So we are well covered for that. When we reach next year a 3 billion new business and getting a double-digit growth on that base, then we will need, I think, in 25, May 26, new capital. Then we probably have our own shares to put them back to the market. Could be one opportunity, could be another opportunity to go for convertible. It depends on the volume development and it depends on the expectation of the future. So we're seeing a 10-12% growth from a midterm run, or see we 15-20% growth as it was in the past. I guess a 12% growth should be possible with our profitability and our capital structure, including the buyback program at the moment. And again, it's the same when we will see from a long-term run a growth more than 12, closer to 15 or 20%, then from a long-term run there will be a need for taking fresh capital from the market, but it's far away future at the moment. New product, that's absolutely right. It's not only risk, it's a bit a question of the calculation approach, and we did that since years. When you ever step into new markets, into new object categories, the residual value, what is the behavior at the end of a leasing contract is quite important. We are always careful there in starting that calculation. In the e-bike business, there is an option that the reseller dealer is buying back the e-bike at the end. So that's a very good situation for us and clear situation to calculate that. For other products, you have to see the development over the years, and that's why we will also grow not that fast, I believe. And again, it is part of our business over the last 20, 30 years to dealing with the residual value. And important is the residual value is not part of the full amortization. We are going to having a full amortization during the lease term, the regular lease term, and the residual value in terms of prolongation, in terms of having a value at the end by selling that is an extra in our calculation.
Thank you. One follow-up on the buyback, please. are you planning to keep the shares as treasury shares completely, or will there be some elimination of shares you buy back? Thank you.
At the moment, there's no plan for an elimination, but it depends at the end of the day on the situation in the future. But there's at the moment no plan because of our growth pace and speed. We think that we will need it from a long-term run, and could be. It's just an example and a thought we're thinking about to take that as backup for a convertible bond or something like that. So there's no plan to eliminate them at the moment.
Okay, so we have a question from our participants joining our webcast, and the question is from Baram Asadolla Zadeh from Richtwert Capital, and he says, well, first of all, thank you for the presentation. Do you anticipate that you will gain many new reseller partners with a plug and lease push? And if so, do you have any targets of new leasing business volume with these new resellers?
Yes, of course. It depends a bit on the market, and especially in our core markets, we believe in that we will be able to win resellers with that plug and lease, especially to win resellers where the business will be not that often. Today, you will even win a reseller when a reseller is going, let's say, 10 times, 20 times, whatever, a week for leasing. And maybe there are some resellers when their plug and lease is quite easy and fast, as smart as possible, then you can also go to the plug and lease entry when making only just one times a quarter a leasing contract. And that could be a door opener for that, because there are also resellers where leasing is not the common solution that could be, and we will win resellers there. On the other hand, we also see some consolidation in the reseller market, and so that is an opportunity for us. From the target level, the overall volume is our target, because the customer, the small medium enterprise, is driving the decision going to a reseller or going directly to us asking for a leasing contract for a frame to invest, and then we can bring the customer to the reseller network.
Thank you. And we have an additional question from Mr. Asadolla Zadeh regarding the share buyback program. And he wants to know whether it is safe to assume that we will not do any buybacks above the embedded value.
It's not safe to assume that, yeah. So as I mentioned, we are going for the approval, and when the program is in place and our, let's say, capital situation is like it is today, then we will go for it. But the embedded value means the capital, the equity, book value plus embedded value. That's absolutely, let's say, a milestone for the share price from our perspective. But there is no safe assumption that we will stop then the program.
Okay, very clear. And then the last one now from Mr. Asadolla Zadeh is regarding cost efficiencies. And he asked whether, as far as cost efficiencies are concerned, shouldn't we process automation to be a stronger lever to save costs than the good decision to focus on regions where we have scale? So can you please provide more details on the cost-saving goals and by when you want to achieve them?
Yes, that's right. The cost-saving goal or cost efficiency is a quite important goal. But when you are going in the same time achieving double-digit growth and cost saving, it's not that easy to measure that. We are going to measure our cost by cost per contract, cost per process. You can also take the cost by volume, by leasing volume or something like that. So there are KPIs which are quite important and show you what is driving the cost. And in our business, a number of contracts, because that's the number of action you have to do in terms of how is the number of the payments of the lessee, what's the number of the reminders, and so on. It's everything is driving by the number of contracts or the least volume. And that is a key figure for us to measure cost efficiency. So from the midterm run, could be that the costs are rising because of the strong growth, but the cost per contract, cost per process, because of the digitalization and the efficiency should come down, and also our cost-income ratio at the end of the day should come down over the next quarters and the next years. We are working on that. But again, for the efficiency, the cost per contract, per process or something like that is a better KPI than looking to the absolute numbers of costs.
Thank you. We have another question from Andrea Carlo De Donno from 4H. And he is now focusing on the new leasing business growth rates and says, well, in the first 9 months of this year, new leasing business was about 10 to 12% below pre-COVID levels. And now 2024 is expected to be 10% and above higher than pre-COVID. What explains this difference in performance between this year and the next 15 months?
Yeah, the difference is quite easy. You can see that also on the chart we show with a dip of the pandemic. Over the last, let's say, 6 to 8 quarters, it was, I always called it rebound because of the Corona dip. And there you have seen a huge acceleration in growth rates. And now we are moving more or less to a normal growth speed compared to previous years. That means from quarter to quarter, the acceleration in new business, especially in the last year, was very high because of that rebound impact, and that rebound impact became lower and lower over the last 4 quarters, and that's why the rates are not that high as it was in the past, and we are now more or less in a situation like in a normal GRENKE year, that Q4 will be the driver for the next year, for Q1 and so on. You see also the summer impact is quite stable, and it was also the case that year. So comparing quarter by quarter growth rates over the last 2 years was not that easy compared to the business 2019 or before. And we will now come in the more, let's say, normal environment for GRENKE business.
So we have an additional question from Andrea Carlo De Donno, and he's now focusing on the share buybacks and says, well, how do you think about the pros and cons of share buybacks in the near term versus the possible need of raising additional equity capital in the next 2 to 3 years?
In the near term, the question of the share buyback is a question since roughly 2 years. It's a question of excess capital, excess liquidity, and so now the situation was for us quite clear. There's excess capital for the next couple of quarters. We know that. On the other hand, the share price is pretty low, below book value, below embedded value, and that was the main reason from today's perspective to do so. And in 2 years, when we achieve our goals, we're talking about the growth perspective. Then it's a question to see what is from the midterm run the right capital we need, and then we may need the capital back from the share buyback, so-called, or we need extra capital. That's the decision of then. But from today to the next 2.5 years, it's an realistic opportunity because of the excess capital on the one hand and because of the low share price at the other hand.
So thank you, Dr. Hirsch. So for the time being, there are no further questions. Ladies and gentlemen, I'd like to thank you for participating in our call. And please note, as always, that our Q4 new business figures will be released on January 4th. I think you can disconnect now, but first of all, we'd like to say thank you and goodbye from Baden-Baden. Thank you.
Thank you very much. Bye-bye.